No,
And, and speaking of consumption, I think the major FMCG earnings out of the way, one major theme in this quarter, you could argue has been some bit of, or not the quite the expected volume growth, if you will. But let me get in Mahima first to do a setup of how the quarter was and what is to be anticipated. Mahima.
Right. So basically, FMCG woes have continued this quarter as well. Raw material prices are going up, and input cost inflation, persists. And because of this, companies are taking price hikes. Now, price hikes are being taken to offset the inflationary pressure, but they are not to the extent that kind of offset the inflationary cost pressure for the companies, and they're being taken in phased manner. And this is kind of impacting the margins for the FMCG majors. All the FMCG majors that have come out with their earnings, margins have shrunk for them, and it is also leading to a decline in their volume growth. Most FMCG companies have come out with a low single digit of flat volume growth. In terms of volume growth being impacted, we are seeing the demand pressure also playing its role. Rural demand is coming back, but it is being offset completely by weak urban demand. In terms of companies that have not done well this quarter include HUL, where volume growth was flat. Management has downgraded the demand outlook from stable to moderating consumption environment. Gross margins contracted by 50 basis points. Godrej Consumer was also flat. Dabur was revenue was up 3%. But companies that did fairly well include Imami, Tata Consumer and Marico. So this is the overall view as to how Q3 has panned out for these FMCG majors.
Okay, thank you for that, Mahima. So you look at the whole consumption space as a mix of expectations of where that money saved by tax cuts will go, and a dose of reality on what their third quarters actually looked like. Now, with that setup, let me go to Abneesh Roy, Executive Director Research at Nuvama Institutional Equities. Abneesh, thank you so much for speaking with us, and always great to chat with you. Let's get your overview before we get into stock-specific stories, because we have so much to talk about. There's Trent, ITC Britannia, so much to unpack today. But let's start with your overview of what you've seen in Q3 so far. Abneesh, can you hear me? Okay. I don't think we have that line fixed yet. We'll try and get him back. But for example, you were talking about a BKG, Neeraj. Festive season sees a 3% volume growth. So what is going on? Even if I talk about, okay, staples have a limit, right? How many soaps, shampoos will come in. But even in snacking, you have seen a bit of a hint or a bit of a hit. Look at Trent and the kind of details that the numbers are showing you. I would say Britannia is a bit of an outlier, perhaps, if at all.
Yeah, I agree completely. In fact, let's pose that question to Abneesh Roy. Tamana, you want to take that? You had the opening thought with Abneesh.
Yes, Abneesh, my opening thought, if you could hear me. First of all, can you hear me, Abneesh?
yes, now loud and clear.
Okay, super. No, so I wanted you to sort of set the context for our conversation on how you are looking at the numbers reported by all the majors in the consumption space and what that is telling us right now about their profitability.
No, I think Britannia, these are good numbers. If you see 6% plus volume growth and overall revenue growth of 8%, these are good numbers, and that's why the stock is up also. If you see this quarter, the palm oil has impacted all food companies and soap players. My sense is Q4 there should be some recovery because Q4 from day one the pricing growth will be there. While in Q3 the food companies took some hike, but it was not there for the full quarter. And in palm oil, we have seen some level of correction from the top. We also need to factor in the rupee depreciation because most of these are imported. I think the good results are from Britannia. If I see ITC, cigarette has done reasonably well, but in their FMCG, it was a severe impact on the profitability because of palm oil, because of maida being higher. And the notebook business also saw same issue of Chinese imports, and the overall margin pressure was there. So this quarter, we have seen that companies like Imami have done quite well. We have also seen the palm oil impacted companies like Godrej Consumer, HUL, BKG suffer a lot. And Britannia is somewhere in between. They have done reasonably well on the volume front. The gross margins are under pressure. but they have managed their other costs really well. So we are positive on Britannia, and we expect that pricing growth for Britannia will now become 2-3% from Q4, and FY26 could be even higher. So we are positive on Britannia.